Let's kick this off by diving into the nitty-gritty of what happens when a country defaults. Basically, when a nation can't or won't pay back its debts.
Yeah, absolutely. It's like when a country stops meeting its financial commitments, it sets off a cascade of economic, social, and political issues, right?
Exactly. Think of it as a domino effect. When a nation can't pay its loans or bonds, investor confidence takes a major hit, and suddenly, borrowing becomes like super expensive or nearly impossible.
Mm-hmm. Right. So, one of the core factors behind a default is having a high debt burden that becomes unsustainable, often compounded by stagnant economic growth.
Yes, and it's like if a country's economic engine, its revenue streams, aren't strong enough to keep up with those high debt obligations, default is almost inevitable.
Right. I recall, for example, Argentina's case back in 2001, where due to a severe recession, a rigid fixed exchange rate, and overwhelming debt, they ended up defaulting. That's a classic case study.
Absolutely. And beyond high debt, economic instability plays a huge role. Think about a recession, high inflation, or even sharp currency depreciation. These can all crush tax revenues and hike up borrowing costs.
And then there's political instability, right? When governance is shaky or there's social unrest, the government can hardly manage its economic issues properly.
Right. When political turbulence and poor governance intersect with economic issues, a default can quickly spiral out of control.
Yeah. Then you have external shocks, like global downturns or commodity price drops. These unexpected forces can severely disrupt a nation's financial foundation.
Exactly. It's like suddenly you're hit by a global economic headwind that just blows away your financial stability.
hmm And on top of that, unsound fiscal management, think excessive government spending without adequate taxation or rampant corruption, can really drive the country towards a default situation.
Spot on. Poor fiscal policies mean that even basic revenue generation falls apart, making it hard for the state to service its debt obligations.
Right. So once a default happens, we see some pretty harsh consequences. Investors start fleeing, and then there's a rapid drop in access to credit markets.
Yes, the immediate fallout is a sharp decline in investor confidence, often leading to massive capital outflows, and essentially, a nation gets blacklisted by the financial community.
Exactly. And that makes it even more expensive for the country to borrow money in the future, right?
Exactly. It's like you're marked as high risk. Credit ratings plummet, and lenders demand sky high interest rates to compensate for the risk.
Mm-hmm. Now let's talk about the broader economic and social consequences. The default can lead to a downturn, reduced government spending, and eventually social unrest.
Precisely. An economic downturn often follows as businesses cut back, consumer spending declines, and unemployment rises. This creates a vicious cycle where the country struggles to recover.
Right. And then the government might impose austerity measures, cutting public services, which can spark protests and even more political turbulence.
That's spot on. Strained international relations are another fallout because creditors and foreign investors lose trust in the government, making future cooperation a
Yeah.
sticky issue.
It's like the whole system just goes into a tailspin, affecting not just the economy, but the very fabric of society.
Exactly. And speaking of systemic impacts, this is why structured recovery and restructuring become crucial after a default.
So, how does a country reassemble itself after such a financial fracture?
Well, first comes debt restructuring. The defaulting nation negotiates with its creditors to modify the repayment terms, extending deadlines, lowering interest rates, or even reducing the principal.
Mm-hmm. Right. It's almost like they're rewriting the rule book to build a manageable debt scenario.
Exactly. And simultaneously, economic reforms are crucial, like tightening fiscal policies, boosting productivity, and even structural reforms to promote transparency and governance improvement.
Yes, I can see how those sorts of reforms aim to rebuild investor confidence and reestablish access to global credit markets.
Precisely. And external assistance plays a big role here too. International agencies like the IMF often step in to provide financial aid, albeit with strict conditions that sometimes challenge the domestic policies of the defaulting nation.
Mm-hmm. That's interesting because while the aid helps stabilize the economy, the conditions can also stir up some political tension domestically.
Exactly. There's often a bit of pushback. But without such measures, rebuilding the financial system might take even longer or may not be feasible at all.
Yeah. And along with those steps, countries often try to stimulate growth by investing in infrastructure, encouraging entrepreneurship, and luring in foreign direct investment.
Right. They lay out packages to boost uh, long term economic productivity and create jobs, essentially trying to jumpstart the entire
Yep.
economy.
Let's not forget the importance of strengthening the financial sector as well, say through regulatory reforms and even capitalization of banks to shore up reserves.
Exactly. Making sure that the banking system is resilient is key to maintaining stability while the rest of the economy recovers.
Mm-hmm. Now, here's a hot topic. Can Bitcoin actually serve as a protective measure against a country's default?
Ah, yes, that's a bit of a controversial angle. Bitcoin's decentralized nature and the transparency of blockchain provide a kind of um, alternative safe haven for people wanting to safeguard their assets from a failing nation's currency and governmental policies.
Right. But isn't it tricky because of Bitcoin's notorious price volatility? Investors could just as easily end up losing money if the value drops quickly.
Exactly. It's like um, a double edged sword. While you might protect your assets from sovereign risk, the rapid swings in Bitcoin's price can seriously undermine that protection.
Yeah, that's a fair point. Plus, there's the issue of regulatory uncertainty and infrastructure challenges that might limit widespread adoption in regions hit by financial crises.
Precisely. So, while Bitcoin offers an interesting alternative, it comes with its own set of hurdles. It's not a one size fits all solution, especially in times of economic distress.
Mm-hmm. One thing I want to challenge, though, some argue that the benefits of Bitcoin as a safeguard outweigh its risks. Yet, when you consider the liquidity issues during crises, can it really be relied upon on a large scale?
I respectfully lean towards caution on that. While Bitcoin's global nature and ease of digital transfer can be advantageous, the liquidity problem and price unpredictability make it less than ideal as a sole safeguard.
I see what you mean. So, to wrap this up, it seems the whole default process from the causes to the cascading impacts and the necessity for an intricate multi step recovery paints a pretty daunting picture, doesn't it?
Absolutely, it's like a perfect storm of economic, political, and social disruptions. But understanding these factors, how high debt, political and economic instability, and external shocks converge, helps policymakers navigate through recovery with strategies like debt restructuring and reforms.
Exactly. And while alternatives like Bitcoin might offer some refuge, they're not without their own complications, especially in a volatile crisis scenario.
Precisely. In the end, the focus needs to be on um, restoring stability, rebuilding trust in institutions, and regaining investor confidence through comprehensive and responsible economic reforms.
Yep. Well, that was a pretty intense deep dive. It really highlights the complexity behind what might seem like a simple act of not paying a bill and how far reaching its impact can be globally.
For sure, it's a fascinating interplay of economics, politics, and even technology when you consider alternatives like Bitcoin. Good stuff to chew on, right?
Mm-hmm. Absolutely. This conversation definitely leaves you with a lot to think about regarding our global financial stability and the ripple effects of sovereign default.
Well, thanks for delving into this with me. It was an engaging discussion on one of the most pivotal dynamics in global finance.
Yeah, indeed.